What's happening, YouTube? Welcome to Risky Ryan Trades. Today we're going to be talking about the chip sell-off and maybe where we might see some kind of reversal in this trend that is forming. This is what my face looks like. Hello, everybody. As you can see, my YouTube studio has incredible lighting. So maybe if I get enough likes and subscribes from you guys, I can afford some damn lighting. Before we get started, let's take a look at my disclaimer. Trading is risky. My results are not typical. This is entertainment purposes only. This is my opinion. All right. So let's talk about the chip sell-off, shall we?
For the chips, SMH below the 50-day for the first time really since May. Let's get to Seema Modi with the breakdown. Hey, Seema.
Yeah, the sector down about 2% today. Carl, number of strategists weighing.
First thing I want to talk about, he had mentioned that the chips are under the 50-day moving average. The 50-day moving average is very important for institutional investors and Wall Street. Wall Street typically does not like stocks and indexes that are below their 50-day moving average, which means that there is going to be a lack of institutional support going forward until there's some sort of, reversal signals happening. So we could see some sharp downturns next week. Be prepared for that.
In on the sell-off in semiconductors, Julian Emmanuel's team at Evercore ISI chalking it up to the sell-off of 2023 winners and uncertainty around the election with growing bipartisan support to crack down on chip sales to China. Those two positive earnings reports from chip players ASML and Taiwan Semiconductor failing to provide a lift to the broader chip stocks. That was a telltale sign. Though Wedbush Securities writes that the Trump trade is not a big negative for the AI thesis. Analysts there remain bullish on NVIDIA. Their price target is $120. It's currently trading at $119 a share. It follows a report last night that OpenAI is in talks with Broadcom to develop a new AI processor. Some analysts, though, finding opportunity in this wreck. Morgan Stanley upgrading ARM holdings to $190 from $107 a share. Shares are up about 2.5% right now. And next week, we will hear from NXPI, Texas Instruments, among other semiconductor stocks.
Okay, so we obviously are going to have some earnings coming up. That's going to introduce some volatility. I don't think that I'm kind of bearish on the semiconductors right now. One thing she touched on was China. I actually think that it's a good idea to keep this technology out of China's hands, or at least delay their ability to have it. Nothing messes up the stock market quite like geopolitical events, and by allowing one of our biggest adversaries, economic and military adversaries, to have access to these advanced chips, in the long run, I don't think is a good idea. They're going to get their hands on it eventually, but by the time they do, we're going to have even better chips in AI. And so as long as we can stay a step ahead of them, that's going to be good for the stock market and good for semiconductors, in my opinion. Now, as far as what to expect levels-wise, I have the Van Eck Semiconductor ETF. I know some of you guys like the Soxx. The overall movement of both of them are going to look very similar. So I just want to take a look at the monthly. And you can see here, I do have Heikin-Ashi candles here so that you can see that we have been in a giant uptrend ever since October. It's outperformed the NASDAQ, outperformed almost every other index the semiconductors have. They pretty much led this bull run thus far. And so it was telling once they started to fall how the rest of the stock market started to soften a little bit. Now, this candle right here is not formed yet. So if I go to a weekly, you can see that we have a reversal candle appearing. And you can also see some key levels I want you to see here. So we hit this important GAN level at 227. We rejected down. And then we pushed through, and we never retested it. We just pushed all the way up into the arc, and then we got rejected out of the arc. And if you see the regular candles, you see this big, ugly, bullish engulfing candle with a giant amount of volume. So this is, this never indicates something good is coming. Now, sometimes, after a little bit of a downtrend, you see right here, we push down, but then the arc pushed us back up. Unfortunately, here we don't have any super large level of support that's going to like push us back up. The next levels of support that I see are at the 240 level, and we also have the weekly moving average, the Kijinsen, sitting at about 235, and then the Gann level, which we never retested, at 227. Looking on the daily, you can see we had a gap down, and I want to pull up the Heikinashis again so you can see that we are in a proper downtrend. Whenever you see the no wicks, that means that we are in, the momentum is to the downside. Now, we do have reducing volume, which is good, right? And you can see here the top of the cloud is confluent with this level right here, which you could see this level held. We rejected up. So it appears that we're coming down to this 240 level to retest this level to see if what happened back here is going to hold again. What's great is we do have support from the cloud. So I would be looking, at least on a daily time frame, for some kind of reversal to occur right here. However, I would not be surprised if we saw a wick push down all the way to this 226 level, this Gann level. There we have the bottom of the cloud, which will serve as even more support, and the Gann level. If I get an opportunity to buy SMH at 227, I'll probably go a little bit overweight from there. Now, I'm not going to wait for it to just tap it and then buy. I might have an initial position that I click buy on, but I won't put it on my full position until I see reversal candles start to form. On the Heikinashi, I want to see reversal candles form at some of these key levels before I initiate my full position, because then I would be able to set my stop loss a little bit, below the low swing, and hopefully we can start re-entering the arc in August. Now, I'm not super bullish on tech for the next quarter. Things change very quickly in this market right now, though, so I do hesitate to even say that. But obviously the NASDAQ is not looking very good. Tech is big, especially big tech, not looking very good. And NVIDIA is such a large, and Broadcom are such a large holding and weighting in the Soxx and in SMH. And thankfully, those two are holding up more or less compared to the other guys. But I would not be surprised if we saw some, hitting this 240 level. So that's the first level that I'm going to have my eyes on. And we'll be looking to see if we get any reversals. Check back in with me, later on in the week, probably around Wednesday. I would imagine we're going to have some sort of formation happening down here. Yeah, it just looks way more likely than not like that we're hitting this 240. We're not just going to turn around and go back into the arc, especially after breaking some of these key levels here. You look at this, there's a gap down. This whole level right here at 250 just absolutely broke down. And now we're just headed to 240, in my opinion. So keep your eye on that level. And I'm not going to just, rush in as soon as it taps it. I want to see how this next candle closes before knowing really, or having an idea of if I want to enter again. So those are my thoughts. I hope you enjoyed the video. If you did, smash that like button. Leave me a comment below if you'd like me to look at a different stock or index. I'm taking requests. I'd love to take a look at your holdings and give you my thoughts on them. And if you're not a subscriber yet, why don't you go ahead and do that? I'm trying to build this channel. I just hit 50 subscribers, had the biggest week I've had yet all month since I started. So thank you so much to all my new subscribers, and I will catch you on the next video.